Welcome everyone, DayTraderRockStar here live, doing a live version of the 10 for 1,000 watch list. Our stock watch list is going out to the universe this time. One time only. We're going to start off actually taking what I call as a market radar, and the market radar is our outlook for the next week in the general market. Especially you want to bring up the radar. I want to bring up anything. You know, we cover everything in this watch list. Let me roll it back just a few minutes. The HPS watch list is a members watch list for Day Trading Radio that covers stocks. And stocks that have to make the watch list have to be set up in a perfect setup where we would, what we have defined as an HPS, high probability setup. And that can range from different type of pattern setups, like a quad, a divergence is our number one setup. But if we also have a coiled channel or coiled stochastic, we'll watch quad rotations on smaller time frames. But the basic general stochastic oscillator, has to be set up perfect. I want a lot of things to happen for a stock to make it onto this watch list. I want to feel good about that. On Monday, I'm buying, and I usually do. We usually do when. We'll go over some of the setups from last week and the week before, and kind of review overall market conditions, and then discuss the stocks that we like going into next week. And these stocks are typically swing trades. You could hold them from 5 to 30 days, let's say, a week to a month. And to take whatever. But remember, an HPS setup in high probability watch list stock is set up usually to make a move within a very short amount of time, and it's going to go up the fastest. We concentrate on pivot areas. So if I had just for argument's sake, these two stochastics getting oversold here, say we had a divergence there, and there was a reason to get in. That's because there was a better chance of a bigger explosive move. And those moves usually happen for 5 to 7 days. So if we have everything set up, we could kind of time how far the stock is going to go. In this case, it's a SPY. But we also, not in the stock, with dead money or in a downward trending market. So everything has to be timed perfectly. And we want to get into these. And again, this is just a... One example of one thing, but let's take this right here. This is a beautiful divergence right here. From this one was brought to my attention, I believe, by probably Jerry Jr. maybe. The 12 and the 26, the low and the lower low, and the big higher low here. So we identify that. Our rule here is anything that gets a circle on it gets a circle real time. You'll never put a circle back saying, oh, look at the divergence, put a circle. I put my circles in. So I know at the time we liked it. And I only put a circle in if I like a stock at a certain time. And that's when we identified that divergence. It wasn't even on the bottom here. I was a little late on this, a couple of days. But divergences are so strong. And the trend line break is so strong. And we continue to move up. And it's not that's a nice move. That's a nice move. And that's a general move what we want. Now, it didn't move from that point on. It actually moved down a little. But it did explode high. It wasn't, deal with the bigger trend. You have to give these a little bit more room. You don't want it's not like future trading where we lose a tick or you're getting stopped out. You need to let the divergence work. It might pull back a day or two and then move up and pull back and move up. That's the nature of the beast. Understand your time frame that you're trading, and things will become easier or less stressful. That's right. So I'm just updating here as I catch my breath from the video because I have a cold. The Bullinox, I believe, just ended. The Apex 3-day qualification is good until I think a few more days, and then of course the other stuff is just stuff there. I'm just throwing it up there. We'll continue with the watch list. Check with me with the new Bullinox coupon. I'll tell you what's available. All right, so back to the drawing board here. A lot of these. We're going to back it up here. Now we explained basically what the HPS watch list was. Now we're going to go back to what I talk about as market radar. And the market radar is looking at the market for the next week. And usually based off of patterns and everything else, we just apply what what we use in our everyday trading, but just on a bigger time frame. And this is really, at all times we look at the market, probably Friday going into this next week is probably one of the most important times I've seen. And mostly because of the market, the candlesticks that is showing up here. It's kind of typically these are reversal candles, all right? They happen at the highs of the market or the previous highs, going out a decent amount of time. In this case, it's all-time highs, which makes it even better. And you gap up and you go, and then you reverse and you close on the lows. In this case, they call this a bearish engulfing pattern because the body is bigger than the previous body, engulfs it, and to the downside. Gap up, close lower. That's the bearish engulfing, one of the most bearish candles. And we've been up here, and look, we took out the highs, but we didn't really rotate on the stochastics here. We didn't rotate here up, on this move right here. Didn't do anything. We kind of flatlined. That's a sign that I'm saying, this is not really getting back up there, but the price is higher. So all of a sudden we have a big daily divergence here. Huge daily divergence. It hasn't crossed back down yet. This could go to all the hell tomorrow if we kind of break higher. But right now I'm getting that feeling that this divergence might be playing out. So that is something I am watching, and kind of a little bit more on a bias to the downside going into this week. So with that said, careful on your longs, be a little bit more patient on your entries, and maybe, should we entertain a couple of shorts if there is something out there that stands out as a short, or the overall markets. This is not a bad short opportunity. This looks like a textbook divergence happening. You're very close to the high, so if you're going to take a shot here, you don't have much risk, because the upside would be taking out those highs. So I think that's a great risk reward, because if this is a top, you're dealing with anywhere. Who knows? It's who knows where. So there we have it, right above us, the highs here. Stop. We're looking for some downside going into this week. How much? Hard to say. You can't, just not, I don't think a lot. Maybe back to the 50-period moving average. We haven't touched that in a while. That would just be a textbook touch, and that right now is 49.39. So 80, maybe 80 points. Is that about right? Yeah. So that's, a decent pullback. It comes back down to a little area of resistance and support, and then the 50. I don't know how fast we get down there. This 50 is going to continue to rise, but maybe something down here that we might watch, just to throw it out there and mark it off on your charts. That maybe if you got down here, it would be interesting. If we got down there, when we got down there, or just pay attention to this trend line or the moving average, because in a downward trending market, when we break above the 20, the 20 is laying on top of us. In a downward trending, we've tagged it multiple times. The first break of the 20 brings us up to the 50. 90% of the time, it gets held by the 50 and pushes back under the 20. I watch this every day of my life. All right, so I know a good trending market. So when this breaks, there's a great opportunity that this is going to bounce off the 50. That would be a great trade opportunity if we got there. All right, on the side of our main chart, move this over so you can see it. Let's see, on the main side, I have a scanner always running, and I can tell a lot by the markets just by watching the scanner. There's some little indications that you can. If you watch the market as much as I do, you start to pick up just little things. Sometimes I look at the screen, and you can just tell there's more red flashing or green flashing. It's just little things like that kind of line up. But I have some scanners running here, especially this area right here. If you're able to get in front of the markets at 4 o'clock in the morning, this will start occupying with stocks that are on the move with higher volume. So this is what we call our pre-market popper list here, our scanner. And this scanner is, like I said, is moving. It's a real-time scanner. It also scanning for divergences or typical setups like divergences on the S&P 500 chart. So there's 500 stocks it always scans, and if it comes up with a daily divergence, it'll pop up here, and I get to check it out. So some of the tools I'm using to kind of define this, but I could see right now we have about five stocks on the list. So I haven't checked those out, so I'm going to check them out with you right now. Amgen, and again, you could see the higher low and the nice candle there. This is not a bad little divergence. It's on the 200 period moving average. I just don't trade it. You know, it's not something I trade. I probably traded a little bit more back in the day, but I haven't looked at this in a while, but it has a lot of things going for it. Look at this trend line. That's a huge trend line. And we're just about, we're basically on it. This could play, this, horseshoes and hand grenades rules apply here, so it's close enough to count, maybe. Anyway, I'm going to circle that whole area as we could see the divergence is starting to play. And I'd watch for a higher high on this one. So a candle takes out the previous 2 days highs, because it looks like, yes, the previous high was just like the previous high. So it's 2 days basically. That'll give us a nice pop. And, the drug companies, if they have bad news, good news, really affects it. So that's something I'm not going to be up to date on unless I dig down deeper. But technically speaking, this actually looks like a good setup, a good divergence right on the trend line on the 200. Everything looks good about it. MDLZ. Organized, very organized. Big reversal candle here. That's the bullish engulfing candle where we gap down and close higher. Gap down is where the candle is. It's a open or white candle. So that means that the price starts on the lows and ends on the highs, or ended higher than it opened, basically. Stochastics are starting to rotate back up. It looks like it's just a standard pull back and go. Nice pullback. It just looks like a standard nice stock here. Holding the 200. It looks like even a little divergence there. That little dip down took out the recent low. You can see this didn't even stutter. So that looks pretty good too. MDLZ. Now Kellogg. I like the Kellogg. It's gap down. I did like it here. It didn't really do much, and then we started breaking out, and there was a divergence here, so I thought we caught that divergence. Didn't get too far. Got a rotation up a little bit further, and then rolled over, and I think there was some earnings here. Now we're in a 5 to 7 day pullback. It's not super exciting at all. It's just basically a boring stock, but it gives you opportunities every so often. So we have a 1, 2, 3 pattern setting up, and I think we're closer to a move higher than lower. But nothing that deserves to be on the list, though. Not today. Match.com, I don't really see it. And then we have Foxy. And maybe we have that little divergence between this low and this low and this higher low. Pretty steep. These stocks, like the Paramounts, the Foxes, all just awful stocks, And why? I've learned how not to pick bottoms. How hard it is to find out and chase things. Like even this is a chase. Rule number 1. Try to buy into the fear and sell into the greed instead of chase and react to now 3 points up, 3 days up, and then it's going to come right back down. That's how it happens all the time. When you have a big down day and you're like, wow, this is really getting sold off. Try to say, wow, this is really like midday and it's like down at the lows. Step in, step in. That's if you're about, if you understand a little bit more. Not that if it's a dead stock and stuff and it's just selling off constantly, but if it has a name behind it and it's just in a nice range or a channel. When you get down to that lower channel line, like even on something like this, you kind of guesstimated the lower channel line right here, right there, and I would have extended that out. And as you get close to that, you should be buying into that, not waiting for the bounce off, because the bounce will happen. Sometimes you didn't even get down there. Actually, I didn't have this 100%. There you go. Look at that. Almost perfect. Almost perfect. Well, that's what we have on Paramount. Maybe it goes, maybe it doesn't. I'm not really that interested in it. All right, a new position that we just recently got into the last week is Apple. Apple down here in that 170 area. I like the 169, 170 zone. It's entering our 5th day of a pullback, way off the 200 period moving average, off the 20, oversold. It's Apple. Every time Apple pulls back, it comes back, every time. So it doesn't look great at this point. We did, but I do like that we broke down through this big 1, 2, 3 channel, and now we're going to kind of come back up and touch it, maybe 175. And then there's probably another trend line coming down, pretty good trend line. You can see right about here. That's a pretty nice trend line. So I'd watch that. Maybe one more move down to this area right here. Right down here. A fast little move. Shake everyone out. The stochastics will continue to have a good momentum. This would be a perfect divergence. This actually does look like a setup for a divergence. The reason is the price could get hit early morning on some news, but there really won't be the volume and the momentum won't shift. So you won't even see a shift on this. I have a feeling if this gap down, mark my words, right here. It is 8:32 p.m. March something. March what? 10th? March 10th. Sunday evening. The call is Apple gets down to this lower trend line or very close to it very fast, not disrupting the stochastics and setting up as a clear divergence, which will be the ultimate entry on Apple. All right. I think it's going to go down a little bit lower. I just think I'm seeing that already. You can actually see this area wants to flush it out, wants to take out the weak hands, and this won't rotate. But the market will kind of adjust this. Maybe it'll gap down or something like that. There will be no volume. When the volume comes in, it'll be buying, and this will continue to move up. And we won't see the reaction and momentum because it's never going to happen. I like that call right here. It's on tape. Let's circle that too. So I'll be all over this on a gap down. All over this. Especially down into that. And let's kind of put a number down there. All right, let's see where that lines up. All right, so 160, 166, 165, 165, 166, 165. That's perfect. That is absolutely perfect. All right, so that's it. We're done. We're still going through something here. Hold on. I have to do a couple updates here on ADMA, even though it's one of my favorites and it's not really making the list. I'd like to update this. Our $7, when we're in this at $4 right here, my target was $7 to $8. All right. This was, we're almost at $7. It's 6 something and change. Has a very strong look to it. It just turned back up. It looks like it has an easy move to 7. And who knows where else? This is a plasma company. This is, and they're growing. And this is the recent highs back here. $7. I mean, $7. If I go out on the monthly, that's the recent highs. If I go out on the monthly, this thing came once from $14. So that's look at this nice move. It's starting to climb good. I just think this is actually building momentum. I don't think there's a rush to sell this. I mean, this is plasma. They pay for plasma. They don't pay for blood. They pay for plasma. No. Blood drives all over the place. But, now I think they have like eight centers that are collecting plasma. So it continues to look good, and we continue to hold on to it. A couple of the members, Hero and some other members, asked me about the SMCI, and again, it's very hard to say the stock came from 400 to 1200 and recommend it, and now you see a big reversal candle on this, as I'm seeing on a lot of stocks. Now, again, to go back to the theme that we might be seeing some selling this week, it's very hard sometimes to pull out stocks you want to go long. And are these perfect shorts? I mean, this almost seems like another perfect engulfing short candlestick, and overbought, and everything else that has come along with this going into the Ides of March selling pressure. Let's go take a look at Netflix. Kind of failing to get up there a little higher. AMD, huge reversal candle. These are huge reversal candles on all these. The NVDA. I mean, wow. Big move. 100 points, basically. Came down 100 points from the highs. That's a big reversal. Big volume. It's marking the map like a big, that's going to leave a mark. So, I mean, we're going against that. Now, where is that money going to flow? You know what I think? I think it's going to flow into the consumer defensive stocks, maybe even some of the some other sectors that are kind of not attached to the tech sector as much. Utilities, of course, are always an interesting one. This SJM, it is breaking down a little bit further, and it's a little annoying because I am on this little trend line, and it did break down. It had some earnings, and that didn't help, and it kind of rotated, but it had a little piercing pattern, took out the lows, closed it higher. That's a bullish candle. And again, in this situation, most of these stocks in the consumer defensive area are oversold on their stochastics, as you can see, where most of the tech are overbought. So we might cross in the middle of the night. The tech stochastic momentum is going to come down, and where's that momentum going to go? It has to come somewhere. Consumer defensive sector, foods, stuff like that. General Mills, GIS has a beautiful base. It just hasn't broken down the base yet. And for me, who keeps on like circle, I like it in the base, but it's not proven me correct yet. I'm holding this. There was another one here we want to look at. SWK, which is not a defensive stock, industrial sector. And again, beautiful divergence here, and that's why we liked it. Actually, I should have circled it again here, but I did put the divergence in. But right here, right where the divergence is happening, that nice turn up, that was your go sign. Now you have a trend line break, but again, look at the nice space on this. So not that exciting, but I'm just holding on to this. I just heard the tradeometer go off, and I'm going to take it was the NASDAQ, but maybe not. Maybe let me go out on I didn't hear what it was exactly. I heard it go off, but I didn't hear it exactly. It has to be NASDAQ. That's the only one I see the oversold level on, right there. So it came up with an oversold level on the NASDAQ. The person in the room was asking about the tick strike. The NASDAQ tradeometer is really good. NQ. All right, so back here to the SWK. Yeah, that still looks okay and still looks, Now, ARM, we had this one. We took it off onto the gap up. It seems to be slowing down. It's kind of consolidating. I'm not doing anything with that now. All right, here's the Russell. And, again, I like the TNA with the Russell. But, again, just like everything that we're seeing on some of the other indexes, these are also kind of reversal. It almost does look like that same setup, like the S&P, that higher high, the lower high, even the possible turnover here. So but that had started to break out though of the base. Nice little base, started to break out, but we are getting that little divergence. All these are setting up for a little move down, and it makes sense if we think about that. The momentum trade in February, mid March. Excuse me. Let me show it to you one last time. This is that's the Russell with SBS. Look at the Qs. Again, same thing. Very weak stochastic rotation. Everything here pointing to a pullback. And I was thinking about that today. I said I wouldn't be surprised if we got some pullback tonight before the market opens. And I should have actually jumped in earlier. I didn't even I usually get into the office and I'll just hold something. Oh, look at that. It wasn't a divergence, but it looked like a nice trend line break. Let's take a look at this a little bit better. I like this short here too on the bounce. Let me get that set up here. I'm going to actually take a little short here. After the fact, but really I had Riley here, and I took it off before earnings, which was a smart thing. We had a little profit in it. I don't even remember, but we took it off. Yeah, I did. We took it off right before earnings, and I felt it was a good thing to do because they had some issues and stuff, and it gapped out. But look at the reversal that happened, and the divergence that showed up. Now I didn't look back at it and continue to watch it, but if we recognize that as that reversal, and I said, well, that was a really steep divergence. I mean, that's extremely steep. One of the steepest. That is the result of this. And again, you're overbought now, and it's not in our zone. But that was a real steep divergence right there. All these stocks that got down here, here we have the ALB, which I kind of circled the other day. This is also gapped down and starting to move back up. These are the ones that have come up off of our scan. This is what I call the approaching divergence setups, meaning that the criteria is close, maybe not perfect, but we'd like to get that jump start on these things. So this is actually a pretty nice channel. Just take that closing price and take that parallel trend line, just drop it down there. Probably pretty good. Yeah, it looks fine. Oversold. I mean, it's close. SJM, we just talked about it. Like I said, very close. I like it here. Mondelez, we went over that one. This one, good trend line, good 200 period moving average. I don't know much about this, but if you're familiar with this stock right here, it's actually in a great trend line here. A drug manufacturer, Zoetis. Off the 200, oversold. It just looks textbook here too. And then LW, I believe they make potatoes. Lamb Weston, it's potatoes. Racer liked it back here. He made a good call on that. It bounced up and then came all the way back down and then all the way up, and now it's kind of pulling back down. Don't really like it, so we're going to pass on that. A lot of people like the snowflake here. I'm telling you, I'm waiting for 150. 150 is my level. It might even go underneath that. I mean, I almost think that 150 is a too obvious of a level, and it probably gets down to 148, maybe 140, 47. But I like that 150 area on Snowflake. It's going to give back everything from the last move up. So just in case. Love the ISRG. Always loved it. Liked it the last earnings. It gapped up. It's slowly moving up. Right around $400. Looks like $400 right now. It's kind of a little cap on it. But that shouldn't be an issue with this one. Again, robotic surgery. I mean, talk about AI and stuff. Any of these things here work. This is a great company. The machines are out there saving lives. Can only figure this getting bigger and better, and more robotic AI machines to do surgery is going to be out there. So, I mean, this is only going to go higher. MDT has a little robotic surgery thing unit also. This is again typical of what was been seen on the pullbacks. Just following those stochastics. We're a little overbought, but not quite. Actually, it does look okay here. Actually looks pretty good, MDT. We're kind of facing the right way. That's what I like, the facing the way. Now remember, we got look at this divergence back here. That's not a divergence, but very close, very close. Actually, there was something here. This was a little divergence here. Everything about this MDT, all of a sudden, I like. I don't know why we didn't focus on this before, but I'm focused on it now. I do like that one. There is the potential there. Again, ISRG in the same sector. And we looked at Pod. Pod came off of that trend line like a champ. We circled that off right on the trend line. It was just a 1, 2, 3, trade 4, 5, and 6 trend line. It was perfect. Also had Dexcom here exploding out of that lower trend line. That was also good. And again, look where this new trend line is. So this is banging off like it's, this actually looks like a pretty decent short area. And I'm not a big shorter in the markets, but that trend line is out of nowhere. It came back from the lows here. We tested it here. We came down and broke down through it, then retested it to the upside and it failed. Tested it here and failed, and now we're back up to it. So makes sense to see a little short opportunity possibly on this. And again, I'm not a shorter in this market right now, and Dexcom is one of my favorites. Hard to short a favorite, but the trend line here, we'll mark it off. I'll mark it off. Remember, squares represent shorts, circles represent buys or longs. I started a position in UNH this week, right off the trend line, and I'm happy with that. It's a classic 1, 2, 3. You trade 4, 5, 6. We're looking for maybe a move back. It's 475, 477 right now. If we were looking up to close that gap, that would bring us right back up to $500. That's a decent move. That's a 23-point move, just to get it back, to get up to that 20-period moving average. So we're oversold. We started to turn back up. Small position. I don't have my account up. I think I had 15 or 20 shares on this. But again, looking for a 20-point move pretty easily on this as we buy into fear. We bought into fear on this, so we're up on it. Up and away. Back here. That is UNH, United Healthcare. We have GEHC, GE Healthcare, on its way to 100. This is going through 100. This is another good company that was a spinoff of GE. And you can see we broke out of our level. This is a very strong flag. Very strong flag. So that looks really good. And it's not even showing that weakness that was coming in with the other markets and stuff. Actually looks fine. All right, one that we had earnings last week that really got affected was Costco. Costco, nice gap down. We crossed over pretty hard. I would, again, wait for some selling to come into this and kind of get it, eventually we're going to move back up. But this is one of the ones I would definitely put on the watch list, especially if we got oversold quickly. Market's actually pushing a little higher now. Here we have Conagra, another consumer defensive food product, still in that long base, but actually kind of rotated back down, started to turn back up, held off the lows. I have 100 shares of this at $30. It's a couple dollars down on it, but overall I am happy with the basing pattern here, and we kind of ledged out. We'll see if it does get some love if the other sectors kind of rotate and then we get that pullback in the market. These consumer defensive packaged food groups have been hit. A lot of them still looking like they're, all looking the same, sideways. And nothing exciting about them. Sometimes that's the best time to get in them instead of chasing them. We had a good trade on Celsius, and got a big pop on that. And I haven't I haven't gotten back into it. I was waiting for a pullback. It's 89 from 80. I think we got 79. So it's up another 10 points, and it continues to look really strong. But what are you going to do at this point? I'm not going to chase it, but this is something we could always go back to. Some other stocks like that continue to look good. They've popped. Intel is one that I like. Well, again, I have a level down here at 41.38. This is actually a reversal candle, as most of the tech stocks gave us this reversal candle on Friday. So we'll have to see. With that falling tide, as I say, most ships go down with the falling tide, and most ships rise with the rising tide. With the tide or the trend and the overall market conditions are going out, the stocks tend to follow that. So it does make sense to see this go wherever the market's going to go. It's not going to buck the trend here. And the same thing, Google actually already had its pullback, and it's actually oversold. I actually like Google down here. They have some issues with their AI, but maybe they use the AI to fix the AI. I like it. I like the pullback. I like the stochastics. I like everything about it. Again, if the pressure's on to the downside, it's going to have a little, but this will be a good litmus test on this. If the market is going down and this one actually starts to hold these levels pretty good, this will be one of the first ones that rotate back up and start running again. Actually held up pretty good on Friday. Didn't reverse too hard. I'll double check that. Yeah, not bad. It held up most of its gains. All right, we're going to leave it at that. I want to get this out before it gets too late, but looking at the futures up now, the futures are starting to pull back now. Tomorrow we get started early. It's hard for the delay in this, but this is when I get it done now. It's over the weekends, usually on Sunday. And again, we did some other good. I did an updated newsletter video today or this weekend. Check your email. If you didn't get it, reach out to me. You have a couple more days if you want to upgrade to your lifetime membership, to a full lifetime membership. It's on sale for existing members. It's $9.99, but if you're an existing member, you get $200 off. So it's $7.99. Just 2 more days. And I think that's it. So we're going to move on and send this on its way, and we'll catch you in the markets tomorrow morning. DayTraderRadio.com.